Right, hi everybody. Just let me close this for a while. Yeah, I'm not a great speaker or a great teacher or these things. The reason why I'm making this video is quite simple. It's for new traders. In YouTube, 9 times out of 10, yeah, for sake of argument, trading videos is all about success. You know, millions and people driving around in their Bentleys and stuff, or you know, Ferraris and blah blah blah, and you know what I mean. They're talking big and yeah. Okay, cool. I don't know these people, but I'm happy for them. They're making billions of dollars. I'm happy. It's cool. But as a new trader, you've often also heard about 90% of new traders, they always lose by wiping out their accounts, trading too much money. You just don't get the hang of things. Your ego get better of you, and you know you start to chase trades all over the place, and the market is just doing everything in the opposite direction, like somebody's actually watching you. So when you're selling, the market actually go into a buy mode, then you chase it down into a buy mode, and it goes up into a selling mode. Yeah, you know what I mean. These things can't get you a Ferrari. You know what I mean? What can make a new trader happy is being consistent. And that's the truth. Consistency is the best thing that you can do in trading. So, you know, we're 2 minutes in. As I said, the video, you know, it's not professionally done. It's just really an advice for new beginners, how to trade successful. And that's hopefully what I'm planning to do, or to shed some light. So basically, when I started with £50. That's all I started with. Am I rich today? I've been trading seven months. So am I rich today? No. I'm happy. And for nearly every business day, I make more profits than I lose. And in this video, quickly, I'm just going to say also, I'll show you a way. Even when you lose, you have not lose. So this video, I'm going to now think about it. I'm going to call it how to get your mind right from the very beginning, because most videos don't talk about how to get your mind right. Many traders, the 90% of traders who actually lose and hate trading, or lost their house, or bailiffs are coming to the door and knocking down and taking away their flat screen TVs or stuff like this, or many traders that go broke after a few weeks or months, is because they did not get their mind right. And that's one thing that I had done in the beginning. In the beginning, I learned how not to lose, even when I'm losing. So, and that's basically what I'm going to show you. So let's wrap this shit up. Basically, for example, we're going to say a trader starts with £500, which is more than what I started with. So he starts with £500. He deposits this into his broker's account, yeah? Many traders will start to trade straight away. This is totally the path to destruction. When I looked across the internet, I was looking for all the consistencies. That's all I was looking for in all of the theories that they talked about and all of the strategies. I was just looking for the consistent one-liners. A one-liners that everybody talked about was only use up to 3% of your initial investment. So here, initial investment is 500. 3% of this is 15. I think. Before I yap on, let's just check this quickly. Multiply by 3. Yeah, 3% is 15. Yeah. 2% would be 10. and 1% would be 5. So what I done here when I started trading, because you know I'm a bit stupid like that, I put down my percentage, which wasn't these values, because I started with 50 pound. But on this example of 500, these would be the 3 different percentage. Yeah, the 1%, which is £5, 2% £10, and 3%, which is £15. The next thing I done was I wrote down my initial investment, which was £50, but here we're just going to use 5, because I'll tell you why. £50 was stupid, because you know you make really small monies if you're going to invest £50, really tiny money. But I'm happy that I did invest initially £50, because it taught me a lot, and what it taught me is how not to lose that £50. So this is an example of somebody trading, investing £500, because I think that would be a little bit more better. So what the path that I took was like this. I said, okay, we got 1%, 10%, sorry, 1%, 2% and 3%, which is 15. I chose the middle one. I have no idea why it's in the middle. People like middle stuff, I suppose, or things that's in the middle. Whatever. Anyway, so I then said, well, if I'm going to trade $10 for every trade, how many trades have I got? Yeah. So in this case, you would have 50 trade that you can do. You understand? You got a maximum of 50 trade. Yeah. Or whatever. Yeah, so you got 500 initially, and how many trades can you do at 2%? You can do 50 trades. Yeah, it sounds stupid, but this shit works, man. So then next what I done was put 1, 2, 3, 4, 5, and you know the rest of the story. I'll keep pressing this one. Right, down to 50. All right, so you get the story. 1, 2, 3, 4, 5, blah 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 blah, 49, 50. Yeah, so I write them down. For each trade, I'm trading only $10, 2%. First trade. Battery's going. Hang on. Right. Right, where were we? Yeah. Right, so here we are. So the first trade, I write down how much I won. Let's say 34. Second trade, I write down how much I lost. 0. And that's losing without losing, like what I was saying. Third trade, how much I won. Say 87. These are pounds, by the way. Fourth trade, say that I lost maximum 10. And you know, if you lose £10 out of 50 trades out of 500, you can't, it's not going to break the bank. You won't cry before you go bed, you know what I mean? Stuff like, you won't be thinking about it all day. Yeah, so then the fifth trade, say that I won 20 pound. Right, now this might seem overbearing since I've already won 4 trades already. Normally what I do, I write down from to 10. So I write that in this case, I can trade 50 trades. I write the first 10, second 10, third 10, fourth 10, fifth 10, yeah? So you got like 5 different columns with the trades. And it's so important that new beginners should do this, because like I said in the beginning, it will get your mind right. So my second column would be 1, 2, you know the story, 3, and then it gets to 10, yeah? And that would be my second column with my second set of trades to 10. So then now it will be 20 trades. You got 10 in this column, 10 in this column, 10, 10, 10, 10, 10, yeah? So you understand that. You write down your trades. Now, what's next is consistent throughout the internet. Out of every 10 trades, when you know a strategy, you will lose only 4 of them. That means there's a good possibility, at minimum, you will win 6 trades out of every 10. And this is actually true, unless you don't know where to enter a trade and exit a trade. And if you don't move your stop losses, this won't be true for you. It will never be true. But if you move your stop losses to 0 or to break even, you know when to enter and exit a trade, which I'll show you, then you're just not going to lose. And even if you lose, you will lose 0, or you'll be break even. I like to put it just above break even, so I can walk out with 1 pence or 2 pence or 70 pence. You know what I mean? Instead of walking out with 0. Some people just walks out with 0 because it looked nice on their history. Look, all of the trades I've lost, it's all zeros, and look at all the big trades I've won, it's all thousands and stuff like that. Good for them, it's good. But I trade different. I like to go, if I'm going to lose, then give me 70 pence or 50 pence, and I'm happy with that. Yeah, it's actually better than minus 50 or a minus 100 or a minus 200 pounds, you know what I mean? But we get there. So you're following the story. I'm going to just recap quickly. This is 1%. The $10 is 2%. The 3% is $15. You got, in this example, $500, yeah, $500 maximum that you can trade with. And because you're going to be using 2%, which is 10, you got a maximum of 50 trades. And it's important, write them down in blocks of 10 tens, and you write down each your winnings, your losings. And it's good if you write down your pips as well, so you know around about what's making the pips, yeah? So that's good. So now that you know that, this is very important. It's called money management, and it's got to be done. If you don't apply this, your $500 or your £500 will be blown out before a week, if you do a week's worth of trading, unless you're extremely lucky and a news break happened to pip you right up to £1,000 or something like this, or £700 to be in more reality. Then you might be lucky, or you just might be lucky. You put the whole 500 on, and you know, I don't know, you might win 2,000, or you might gain 2,000. But if you're not that lucky, this is the safest method that you can choose. So with that said, let me just quickly open up. This is our trade. I got 2 moving averages, and I buy above and sell below. You can't get worse than that. This is actually the most basic way of trading, and I use this with candlestick trading or price action by just reading the action of the charts. If you can read the action of the charts really well, and you got your indicators, then you're good to go. I don't even really need the indicators. I lean on them sometimes for confirmation. And basically, that's what all indicators do, apart from Fibonacci and harmonics trading. Apart from those kind of indicators, all the other indicators is practically, I wouldn't say bullshit, but they're just there to confirm a possibility or confirm that, yeah, okay, go, or something like this. And the more indicators you have and the more confirmation you got, then you can go in. But you know, people who trade this way, I'm happy for them. They've got that locked. They've mastered it. So you know, I respect them for that. Me, I just got 2 moving averages, and half of the time, because I look at the candle and just read the candles themselves, I don't even use the moving averages. It can be done. It's not an impossibility. So that's what I use. I use this basically with resistance and support lines. So to tell you the truth, I use resistance and support lines, and I use these 2 moving averages. And let's see, sometime I might slap on pivots just to see what's happening in a day. So you know, here I got my pivots just to see what's going to be, what happened, the price high low for yesterday and where it might occur today. Those are the things I use. That's it, nothing else. It's done. So if we get back on an hour on that, and then push that here, then you probably can see this a bit better. Yeah. And there's a Fibonacci. Sometimes I use the Fibonacci, not all the time. Sometimes I just use it to see if the market will retrace. You know, and that's it. But I'm not really chasing it like that. So I've used it here. You know what I mean? So we see how it goes over the weekend. But again, I'm not really, it's not bugging me out. I don't need to come in and start to look for that 31 or 38% retracement. I'm not that sort of trader. But it's just fun to slap it on just to see if it actually does it. And actually, Fibonacci tool is really good, because when it comes to retracement and extensions, is near enough damn perfect, since it occurs in all over nature. So, and who's behind the market is just billions of people thinking. And where do these people come from? We all come from nature. So the Fibonacci tool is actually a great tool to master. And it's really quite simple, actually. So anyway, back to the point. The point that, let's pull up something else here. Let's see how this goes. I'm gonna just pull up another chart here and put it on the hourly, and then you can see I sell everything below. That's the crossover here, and I'll sell everything here. So just let me just widen this out if I can. Yeah, then you see the crossover happened here, but I would not trade here. Anything that's looking going sideways, I don't trade sideways market. I can count up to minimum 5 candles to see if it will break. If it break the candles, if it break the sideways pattern, a triangle or a wedge or whatever, then if it breaks it around minimum at 5 candles, then I'll hang around and wait to trade it. If not, I would not trade it. So this one, for example, I would not trade this because it's too much. You know what I mean? The crossover was here, and it's, you know, this is on an hourly. Trust me, I'm not going to wait all this time sitting down looking to when to enter the trade. You can see blatantly. So I would have missed that one. But you can see if you happen to come a few hours later, you could have hopped in here and got out anywhere on these 2 ones, or even this white one just before the white, the candle before the white one. You could have got out there. Yeah. And then you could get out somewhere here. And that's what, about 1,200. Yeah, 1,200 pips on the hourly. That's pretty good. That's decent money straight away. Yeah. And actually the candles, they crossed over here to end the trade, but you'd have already got out about here. hours ahead. So you see, it's pretty good. Let's find the next one. You know, when you back test this strategy, it does work. It's simple, it's stupid, but it works. It's not fancy. The crossover is here. Yeah. So me personally, when the crossover, I'll count about 5-6 candles. Bam, bam, I would have gotten on any one of these three. Probably not the first one, because I like to wait for a confirmation one. And I wouldn't have got on the second candle here. And I'm talking, I would have been waiting here or come back to see. And definitely this would interest me because the market is at its lowest. So at this point, you know, it take a few hours. I'll come back 3-4 hours later just to check. And I see this big candle, I'll be happy, but I'm not going in. Then the second candle would be that one. I would not go in. But on the third candle, I would have gone in on this one. You see what I mean? I would have gone in. And it goes straight up, it goes straight up, it goes way up here. And it actually crosses over here. But I would have been out a long time ago. So let's grab the pippage. And this is an hourly. I trade hours. Just the hourly. So I would have got in here as my confirmation candle. Probably put 2 trades on it. First trade was here. And I probably most likely, after seeing these candles forming, I probably most likely got out. And what we're looking at here, 70 pips, 760 pips, just right there. That's it, it's done. You know, if you want to be really greedy, or, you know, if you know about all this sideways, who's making these decisions in the market, or whatever they call it, not divergence, convergence, then you can stay in the trade. Who knows? You'd have come up here. And we're looking at 1,600 pips. You know, if you really want to risk it, then you could have gone straight to where the signals say you should come out. You know, we're looking at 1,900 pips. That's money. That's money straight away. Is it impossible? It's not impossible. You know, here's the next one. Here's the next one. It's crazy. It's a simple price action. You know, from up there to down here. You know, look at that, 2,700 pips. And all you're doing, I'm following this blue line. All the way down, all the way down, all the way down. Bam! And it's not even crossed over. It's crossed over here. At this point, it crossed over. And it crossed over here, signaling you, telling you to buy, to sell here. So it's giving you enough leeway to get into the market and to get out. So, you know, you can back test this all you want. It works every time. Well, not every time, I'm lying. It works at least 60 to 70% of the time. I would even go far as 80%. If you know the price, how to read price action and read the candles, this will work at least 70 to 80% of the time. You know, here, it crosses over here. It's telling you to buy. What did the market do? Whoop, right up. And it actually crossed here again, telling you to get out. Most people would have gotten out here. If you got time to sit down and look at the computer, then you can keep adjusting your take profits. Just keep adjusting it, because you're reading price action. Once you see this indecisive candle appears on the right of the white, then you hop out of the market. You take your money. Let's see how much pips is that. Oh, come on. $800 and something pips. That's a lot of money. So you enter here at the previous, say you enter at the second one, or halfway through this strong one. This is probably a news break. A news break probably caused this. You're into halfway on the second one to buy. You set your stop loss here to the previous low. How much pips is that? I'll say about 30 pips. Let's see. I don't know. It's 124 pips. Depending on the price, it's 12 pips. Yeah? You set your stop loss there. So you're halfway here. When it goes to about the second or the second candle, you move your stop loss to your entry where you entered on. So if market comes straight back down, you've lost nothing. And this is what I was saying in the beginning. You can lose without losing. Because if the market turns around and go against you, you've already moved your stop loss to your entry line. And if it hits that, then it's zero, you've made zero. And that's what I was saying. Sometimes I like to move it just above, a few pips above the entry line. That's what I do. Here again, when it goes to the third candle, you just move your stop loss up halfway. Fourth candle, you move it to the end of the long candle, lock in profits. Then when it goes up here, then you can, you know, that's near enough to your take profit. You can move it as much as you want or leave it because it's going to hit your take profit. Then, you know, if you've got time, you can sit down and wait through all these hours. Or you just leave the market. Some people sit down and wait. Price would fall at the end just a tiny bit. You wouldn't have lost nothing. But you'd have lost something if the price began to come down. Now, where you would set your stop loss probably would have been about here while it was going up. But if you're sitting down watching it, then you just hop out of the market. If you have time and it actually broke in your favor, then you stay with it. Then you can up out here. You hop straight out here. And this is where the line crossed again to say get out. Get out. So the strategy, it works. It simply works. And you know, that's what I use. And you know, you can back test these things. You know, go back and look into it. Like, let's put this on. I'm gonna put this on monthly. And look, this is the month. What's that? 1996, yeah? That's 1996. Now let's put this on hourly again. And okay, it's the weekend, so the charts, the full charts is not there on the hourly. Let's try the 4 hourly. That's something I want to see. Let's try the days. Trying to get as early back as possible. Here we go. Here's something. Right, so here you can see we're in 2015. Yeah, and straight away you can see where the lines cross here. By the way, this is the day chart now, but it works on any time scale. You put your trade on a day, over the next few days, market sold. 4 or 5 days, you just come in, look at it, just go away again. The only thing you need is more, your stop loss on a day chart should be around, if you got 400 pips to lose, then put it on it, but I would not suggest it unless you feel comfortable doing that. But if you can read price action, then you can do that, because you know that, you know, after a couple of days you're going to make back more than enough. So much more. So anyway, you know, that's really what I wanted to say to new traders. Get your mind right. Get the mind right. And you know the strategy thing will come. But the thing that you should focus on is this. This is the most important part of trading. Not how to gain money quickly, but how not to lose money. If you get your mind right and have this way of thinking before you start trading your money, you'll find out £500 will make you a lot of money, and you'll have more days or months to trade with that £500 than if you did not do this. And this is guaranteed. I can guarantee that. This, I don't know why people don't talk about this in many videos, because this is the foundation. This is the pillar of trading. Your percentage that you're going to trade on every single trade. How much trades can you do from your initial investment? Then you write down all the trades that you can do, win or loss, so you can see. Write them in blocks of 10, because out of every 10 trades, you're going to win 6. If you follow like the two moving averages, and that's the simplest strategy in the playing. The two moving averages. Everybody laughs at it. Oh, you buy above and you sell below. And look, I don't use that. I use the Fibonacci harmonic to the 3rd square root meaning of 10. And, you know, I'm happy for them. But I use the simplest method. And then, you know, I've started trading this year, 2016. And I'm comfortable. I'm not driving a Rolls Royce. I'm not driving a Bentley. But I'm comfortable. Richness is a matter of perception. And if you're going to chase money, money will chase away from you. The only time you can have money under control is when you do it right from the beginning. And the beginning is get your mind right, write your trades down, know how much trades you can do with your money, and stick to the percentage of your capital. I can guarantee you can't fail. You move your stop loss to break even. When it passes 20 pips or 30 pips, move your stop loss straight to break even. Because I can tell you this, it's better to leave a trade gaining £0 than to leave a trade with a minus £100. There's a big difference. And if you keep leaving the trade with minus, you're going to look back at this video and think, shit, I should have followed that idiot. He was telling the truth. So anyway, it's 32 minutes and I've talked all this bollocks long enough now. So happy trading. That's as best as I can say. And maybe in the future I'll come back and show you some simple moving averages and price reading trades that I'll do. Yeah, I'll probably come back, do about 5 or 6 trades and put them up just to, you know, support this video. Anyway, happy trading, and remember, get your mind right. Do it right from the beginning. When you do it right from the beginning, you can't lose. Even when you walk away with £0, you can't lose. All right, well, I'll catch you up. See ya.